So in investing, there is a very simple acronym called KISS. Keep it simple, stupid. So again, with this pattern on an S&P, it's a very simple pattern of a rising channel that continues on the SPX and SPY, and it simply could push us all the way to 6,000. That's not an unrealistic number, as many would otherwise want you to believe. However, we're going to be talking some of the threats to that number, kind of give you the bull and the bear thesis today. And we're going to be talking about the levels that we're going to need for next week, as we always do on the Weekend Deep Dive. Thank you all so much for tuning in. And as always, guys, if you would not mind hitting the subscribe button, having bell notifications on, we let you know when we go live, usually Tuesdays and Thursdays, where you can come in, throw your chat, throw your requests on to us, along with we'll cover anything of the major news to your ticker, so it's always a fun time. And if you find this content enjoyable, throw a like. It lets YouTube know that this was helpful and lets us push it out to more people. So thank you all so much for tuning in. Let's dive into what on earth did the market do this week? Well, let's start with the news, right? So really the only news we really have to talk about is Powell basically saying, hey, we foresee rate cuts 3 this year, still leaving the door open for possibly continuation of quantitative tightening, where they're basically either going to run their balance sheet off at the same rate, run their balance sheet off at a slower rate, but still running to the end target of their balance sheet, or they're basically going to not cut this year. So all the options are left on the table. He didn't necessarily discriminate against one of them. However, he did sound more dovish based on what the reaction of the market was. However, I have been saying that the market's basically taken his reaction and just regardless of what he says, we always go green, right? That's kind of been the FOMC meetings. It really doesn't matter. As you guys saw the title of the video that we did on the FOMC, nothing else matters. And pretty much that we can look at it from the initial jobless claims ticking down. Jobs doesn't matter. He was even asked about this where, hey, does jobs impact your decision making? And then he did the hint at that if jobs degraded severely, like you had a massive culling of jobs, negative job growth and stuff like that, that they would maybe have to cut or change policy, or he basically worded it as it would affect policy. So therefore, we can infer that maybe some rate cuts from that if the economy starts to kind of implode. But history tells us that that's normal for the Fed. And as always, we do have the net speculative positions actually cutting back about 40,000 net speculative positions. So, and going more long in the NASDAQ. So we see those two here. Not really surprising there. However, there's plenty of bear fuel as we break to new all-time highs. And the market just simply staying in this channel, going up higher. I would like to bring your attention to one thing, and that's Bitcoin. Bitcoin actually had a pretty down week, almost down from basically from the highs of approximately 14%. So again, Bitcoin's big swings, volatile asset. We could be looking at an A to B pattern on the way up, but we're going to be talking more about that in the later part of the video. First, I want to dive into the levels that you guys come here for every single week. So let's quickly jump over here and plop the levels on you for the week on the S&P. So guys, as we can see here, 518 now becomes a pivot point. We broke above the previous all-time high, and 518.22 now becomes the pivot point for the S&P. We do have a gap on the chart that we established on the run up, the gap up on Thursday, and then sell off Thursday and Friday. So this could be a simpler pattern playing out here. Now we could have a very small A to B pattern with the gap fill playing out to project us up to 533, which could be the next run depending on we get data in this week on PC on Friday going into the holiday. Now it is a holiday week, so volume is going to be lighter on Friday in comparison. People are not going to put as much risk on. However, it is the close of the month, so you got options expiry, you have lower volume, volatility could be elevated. We're above the 9-day moving average at 516.67, so we got support there, and we're pretty far stretched away from any of our supporting moving averages as well. So anything above 518, I would say looking bullish, maybe come back in the first half of the week, be bearish, followed by larger bullishness, a rotation off 518 for the week. breaking a 518 and 516, that's when I would start maybe concerning myself with 511. But really, until we get that narrative, then the bear narrative has to be on the sidelines. It really isn't in play. There's no evidence to it, and we got no earnings. The only data point we have this week, if we just jump over to the news real quick here, is on Friday, and actually Thursday we do have the GDP non-preliminary. So we're going to get the actual GDP for the last quarter four, 3.2% expected. Previously was 3.2. So a stagnation in GDP. However, it is still higher than the long run trend of 2% GDP. So therefore, this is good news for the Fed, good news for the economy, soft landing achieved. And then obviously on Friday, we get PCE prices, which right now we only have the month over month going down. We don't have the year over year number for core, and we don't have the year over year number for the month for the regular PCE. I will update this as accordingly when this comes out, kind of talking about a pre-PCE video most likely for Friday or Thursday really. And then we can talk about this more then all the revisions will be in and we get the wholesome number. Just looking at this at a glance, it's going to be CPI. Similarly, I expect 2.6 to be the core and then 2.6 to be the PCE. Actually, conveniently, tick up or 2.5. So you know how CPI ticked down on core, ticked up on year over year. I expect the exact same results on PCE. So 2.5 and 2.7 or 2.6 both. So that's my expectations for this. And it's further supported by the month over month increase on the regular and a decrease on the core. So core actually could stay stagnant. There's your scenarios, right? We're going to see what the expectations come in at. But again, what these expectations lead into Friday does not mean what we get during the week. For the week, we got to pay attention to the levels. 524.11 is the breakout period if we're above that bullishness all the way. And then the bottom rotation, 518.22, looking at secondary support at 516.67. And then if we are below those numbers, then we start looking at 511.12 being, hey, this is where we got to pay attention to. Is it going to be a dip buy opportunity somewhere, fake out opportunity, or do we just rip through 511 and then head lower? I will keep you guys updated on that as always. However, we got to jump over to the NASDAQ real quick. And this is where it gets convoluted, right? So I do have the previous levels that we had here. And we are above the previous resistance, but we have what is known as a failed breakout. As you can see here, the NASDAQ broke out to new highs, but failed to hold it. We only held it for approximately a couple minutes on Thursday before selling off, and then Friday was just a wiki candle. So this range is almost entirely intact, which is going to be pretty interesting going into the preceding week because, well, if we just quickly eliminate these ranges and pop the new ones on, we see a lot has not changed. However, we are in a different rotationary period. We have a gap still around the 440 mark. We are sitting around our supporting pivot of 445.61. We barely closed above it, only $1 roughly on Friday, which means that there's more downside potential with tech. However, if tech decides to rally, then we could definitely get a larger move in the S&P. We could get a larger move in the NASDAQ, and it'd just be an overall broader rally. However, we're going to talk about some of the threats that I see. But first, recapping the levels, anything below 441, I'm definitely looking bearish on the NASDAQ. That would be a complete gap fill with retracement of the move, less than 50 or more than 50% retracement. If we just look here, a 50% retracement will put you right around 440.128, whereas the 9-day moving average is sitting right around that point. So anything below that, I'm saying, hey, this is where bear territory starts. Now, the warning bell is going to be closing below 445.61. If we do that, then I am expecting a rotation to start downwards or possibly a fake out to the downside going into PCE. Everything that I say here, guys, is contingent on going into PCE. Once we get that number, it's a catalyzed event. The larger levels are what you have to rotate off of, but the intraday action and intra between those levels is going to be subject to change. So just a fair warning there. So 433.33, I love that number, is basically the level that we're going to have to find support at. And our 50-day moving average, it is around that point as well. So we see here the 50-day is coming up. So even if we get bearish rotation, we got more support on the way there. So NASDAQ going almost sideways in this here is a coil winding up and we're about to explode. So is NASDAQ going to explode higher? Is the S&P going to go down lower? That's all the things we're going to be paying attention to this week. And again, it's a lower volume week, so we have to keep an eye. It's going into the holidays. People are not putting as much risk on, so it may be a bearish week. Traditionally, that happens going into holidays where risk off mentality is, as we saw with Bitcoin. Is that going to be the preceding effect for this week in the market and then rally right after coming back into the holidays? If we look at the Russell, Russell is still range bound. We really haven't seen a lot of movement. However, it's above the 9-day moving average. So Russell rotating by 210 would be bullish. Rotating below 204 would be bearish because that's the 9-day moving average where you just bounced off of. RSP as well, as we can see here, above all-time highs and red day on Friday. So smaller caps were selling off versus the bigger caps. And this is when we're going to start getting into like things I'm seeing that I'm concerned for the bullish narrative. Now, I'm not saying the bullish narrative can't continue. I'm just saying these things are one for concern. As we went over in the beginning of the video, Bitcoin selling off. Now, Bitcoin could very easily be setting up an A to B pattern on the way up, all the way up to 85,000. Like that is very, very possible. However, you got to trade above 75,000. And it did come to that point where I said that around that $75,000 mark is going to be the psychological barrier for Bitcoin. So do we, one, come back up, double top here, and then slam down? That could be a preceding effect right here. Or do we just basically set up a pump flag, right? Pump, flag, and then pump again. So those are the two things that we're going to be talking about on Bitcoin. We're going to keep you guys updated. But first, Bitcoin needs to get above 67,959. That's 9-day moving average. Once you get above that, as we can see previously here, got above it, retest, and then push higher. And also where we had our secondary base form, we were hugging that 9-day moving average. So two things to pay attention to: the 67,000 mark and the 75,000 mark on Bitcoin. Get above those, blue sky breakout essentially, and Bob's your uncle, and you can keep going. So again, those are the important things for that. Now, what else am I saying? Well, first of all, Apple loves to just like yank everyone's chain. This is a very, very bad pattern for Apple. This is basically weakness in my opinion. If you manage to push this high and then get slammed right back down, that is bad. That is basically a lot of growth being wiped out and the momentum being lost. So Apple is in danger of making a new lower low, especially with the momentum and the volume it came down with. Now we need to see, does it even get above 173 for their rotation to the upside? 179.25, which we missed just with a couple ticks, was the previous low that we broke. So again, do we get back above that? Now we have a dead cross on Apple officially here, which means the stock is bearish. The short-term price is now moving down while the long-term price is moving flat. So does the momentum continue? That's what we're going to have to keep an eye on for. Next, Microsoft, really the only one holding up the market, but is getting a little toppy right here. Netflix stronger than both. Amazon and Netflix kind of being your strong suits, but is not really paid attention to. Tesla continuing to make lower lows. Nvidia just looking like Nvidia, flagging out here, possibly getting ready to push. And I did say Nvidia could push above these levels. This is what I'm seeing from the Nvidia video, that this is the confirmation of that bullish run. So now we got to be paying attention to this upper high here. Do we get another blue sky breakout on Nvidia? And do semiconductors follow? AMD saving itself by that 50-day just by almost 60 cents. So again, that's a little bit of a warning sign. NVIDIA looking not as strong as it always is, but looking like it could lead. AMD looking weaker. Intel just being absolute crap. That looks like a head and shoulders that is about to play out. Left shoulder, head, right shoulder forming, and then playing out to the downside. So these are some of the things that I'm looking at. I'm like, okay, well, do I want to be truly high leverage bullish right now, or do I want to be more of a cautious bull? So HSI, which is China, looking like it's struggling around here, forming like this, like Apple did, maybe a head and shoulders here on that 50-day moving average going sideways. So this is something we're going to be paying attention to, how China unfolds, because if China breaks that 50-day All this price action from here to here, I'm saying is just going to sell off right through, form a new localized low going back to almost October or the bottom of 22. So again, China not being super bullish. If China goes, our markets go with it, just because the global markets are so interconnected. Nikkei holding up strong still. So again, we got some mix in these markets where one market is showing strength, one market is showing weakness, and what is showing strength is the dollar. The dollar is actually about to have a golden cross. So it is one day away, which when you guys are watching this would have crossed over based on the movement of the dollar. So the dollar is saying, hey, I'm bullish. Bullish dollar means bearish stocks. That's traditionally what history teaches us. And VIX is a better indicator of this. You know, when VIX keeps faking everyone out, coming down to this line, and I was actually talking to myself about this, if VIX ever came back down to this line, I would actually buy VIX calls. And it did it. I didn't do it, which I'm kicking myself a little for, because this would have been an excellent opportunity to scoop up some insurance around this $12 mark right here and make $1 on the move. So that would have been pretty nice. However, VIX coming back down to its long-term support or idling level, as I've shown here, is an important thing. VIX we pushed on the market, right? We didn't push a lot, but VIX retraced back down to this level. That is a little bit of caution, because now there's more potential to go up versus potential to go to the downside. And last but not least, let's just jump over to bonds real quick. 30-year, still in the channel, tightening up in its range here. These longer-term yields are being more bearish on Friday. However, that could be money flowing into bonds. Remember, yields are inversely correlated to bonds. So if people are buying bonds rather than assets, that could mean that there's more fear in the market, or they just want stability. If we look at the shorter-term yields, like the 1 and the 2, still holding stable, right? This could be a cup and handle right here, or it could be a bear flag pattern. We have to see how this plays out. The yield curve is still inverted like no tomorrow. It's becoming a pretzel at this point. But now this officially, dating back to many crashes, this is the longest inversion in history. I believe I was mistaken with the Great Depression being the longest. However, now we've surpassed every single inversion in history. But nothing bad can happen, right, guys? Nothing bad can happen with an inverted yield curve, because the pollsters told us, right? Like that works ever. NYCB, one of the things I always talk about, is looking weaker, as we can see here, kind of stabilizing out, heading into its earnings. We saw this with FRC, so we'll keep you guys updated on NYCB. We'll keep you guys updated on the banks, and it's going to be a pretty interesting banks earnings season almost in 2 weeks. So Fatal's going to give you the biggest winners and losers, and then we'll be back for the discussion about a bunch of topics that we actually got a really nice debate for this week. So I'll see you guys in a little bit.
The S&P 500 this week ended the week on 1.35% in the positive, mainly coming off of the FOMC, where Powell pretty much stated that we are essentially going to get rate cuts this year. Taking a look at the next upcoming earnings for March 25th, 2024, on Monday, we don't really have much of anything. On Tuesday, we have companies like GameStop as well as McCormick. On Wednesday, we have Rumble. Now, we're not going to cover Rumble's earnings on Wednesday. We're essentially going to cover them on Thursday. But yeah, Rumble is on Wednesday, as well as Carnival Cruise, as well as Cintas and Paychex. And on Thursday, we got companies like Hut 8 Mining, as well as BRP. And on Friday, because it is Good Friday, there isn't anything, and well, markets are essentially closed. So these are the earnings for March 25th, 2024. Taking a look at the S&P 500 heat map, we can see that this is mostly in the green, with only a handful of companies massively in the red. Taking a look at, guys, the technology sector, we got over here the worst performer being the company ACN, Accenture PLC, losing 9.9%. And the best performer, it is the company Micron Technologies, gaining 18.19%. The communications sector is mostly in the green. In fact, the red ones weren't even that massively in the red. We got worst performer EA losing 1.91%, and the best performer overall, it is of course Google, gaining 6.75%. The consumer defensives is kind of 50-50, though again mostly in the green. Once again, worst performer, it is the company Brown-Forman Corp, losing 5.25%, and the best performer, it is the company Archer Daniels Midland, which we have covered here on the channel a decent amount, and I highly encourage everybody to check out those videos and see what I have to say regarding this company because it's very, very interesting. Looking at now the healthcare sector, this is a very, very 50-50 kind of sector, as you guys can see over here. Worst performer, it is the company Abbott Laboratories, losing 4.26%, and the best performer, it is the company Illumina, gaining almost 7.5%. The financial sector is also very deeply in the green. I guess the bank term lending program ending has had no effects yet. However, we are going in now Q2, which all the earnings from Q2 are from Q1. So it'll be interesting to see how Q1 affected the banks. Looking at this though, worst performer, it is the company FactSet Research Systems, losing almost 6%. And the best performer, it is the company Truist Financial Corporation, gaining 8.12%. The consumer cyclicals, it is very, very much in the green, with only a few companies losing and only 2 of them massively losing. The worst performer though being Lululemon's, losing 13.28%. Also Nike falling at around 5.8%. All in all, though, the best performer, it is none other than the company International Paper Co., gaining 8.75%. The industrial sector, it is by far the sector that we have seen so far with the most green. In fact, only 2 of them in this whole entire sector lost, and those were the companies LHX, only losing 0.43, so pretty much nothing. And the worst performer, it is the company North Fork Southern, losing 0.67%. Everything else, guys, gained a lot, like a significant amount. Best performer here would be none other than the company FedEx. They did have earnings and they absolutely crushed it, gaining 12.25%. The real estate sector, on the other hand, is a little bit 50-50, though it is leaning more towards the downside. Worst performer here is the company Equinix, losing 5.81%. And the best performer, it is the company Weyerhaeuser Co., gaining only 3.73%. Also have something to note, guys, the fact that Realty Income Corp lost 0.21%. It is still sub 60. In fact, it has not reached $60 for a decent amount of time now. So if you guys are still buying at this point, you're really getting a nice dividend yield, 6+% if I'm not mistaken. The utility sector, as you guys could see, it is mostly in the green, with only a few of them being very massively in the green. However, though, the worst performer, it is the company ES, losing 1.75%. And the best performer, it is the company AES, gaining 8.2% after several weeks of it crashing. You guys can see it is now recovering. However, will this continue? I'm not necessarily certain. In the energy sector, this is also very much in the green, with only 2 companies losing. We got Chevron losing 0.57% and Hess Corporation losing 0.81%, which was also the worst performer. All in all, though, the best performer was none other than the company TRGP, gaining 4.65%. And lastly, looking at the basic materials, only a few of them fell. Worst performer, though, was the company FMC Corp, losing 4.13%. And the best performer overall was Steel Dynamics Inc., gaining 4.43%. All in all, though, here is the S&P 500 heat map for the week. Again, a lot of green, even after the FOMC, which it's not really surprising seeing that Powell came out saying that, yeah, we're going to cut rates this year. I was not surprised that this swung the entirety of the market to the upside, right? Again, I have said here several times as to why we don't want rate cuts, but we'll see what happens as time passes. But anyways, that pretty much does it for this segment. Take it away, Mike.
What I didn't know was that Rumble's earnings were going to be Wednesday, so I'll make a video on that for all you guys, because I know everyone loves Rumble when they requested on the channel, and you did a video on it recently, haven't you?
Yes, I did. I did a fundamental, at least I tried to do a fundamental analysis on Rumble. But again, because it's such a new company, it's almost impossible to do this kind of free cash flow approach on it, right? So There's a lot of speculation to be involved. Rumble's mainly, the reason why I personally just bought 25 shares of Rumble is strictly speculation. You know, we just finished the partnership program, and it was good. You know, it was. I think that they're gonna do great things. You know, the CEO, he goes on podcasts. You know, he goes on podcasts and answers viewers' questions.
Really?
So, yep. He does do that, and you know that shows a level of
transparency,
transparency, integrity, right? That at least, hey, you're aware of who butters your bread, essentially.
Yeah.
You get me? So yeah.
And I may actually, if Rumble comes down to this level right here of the moving averages, I may pick up another 100 shares during that time, right? So we'll see what happens.
Where would that leave it at, by the way, if it does fall down?
$6.51.
I know I'm not buying at this point, but you know, at that level, 75 shares, that would be what? Just to complete the 100 total.
It's like
that would be what?
$500-$400.
Right.
My net invested is $600, so I'm like another 100 for like another 600. I'm like, I'll take the speculation, right? Because I got my line in the sand for it. But
right,
and it's one of those like I'm not adverse to holding it forever. But again, we'll save that for the Rumble video when I do it, and the earnings will go over that. I'll try kind of giving you guys a longer rundown of its earnings and what they're doing. My concern with earnings, just to close out my thoughts on it, is that it's been running into earnings. And a lot of, buy the rumor, sell a news type event. So we're going to be covering that. So make sure you guys have bell notifications on and are subbed for that. So next thing I want to dive into, as always, is PCE expectations. So I gave my prediction this week. And what I didn't notice this when I was looking over it, guys. The man, the myth, the legend is speaking after again? PCE. So I'm like, why do I always have a bone-chilling thing after Powell opens his mouth after PCE? Because if this number comes in like CPI, which that was my prediction, I was thinking either 2.6 for both or 2.7 and 2.5, which is like a 0.1 tick up, tick down core to PCE standard, or they both go 0.2, which then would be a 2.6 for both. So they would equal each other. So Powell's seeing that. Obviously, he's going to get the question of, do you like the report? And so I want to hear your prediction first.
So I'm actually surprised that PCE is this week. I was not aware of it. But as we can see, when it comes to the normal PCE, the year-over-year one, last time it was 2.4, and the core one is 2.8. However, my main concern is the month-over-month one, because last time it was 0.3, and 0.3 for the normal one, and then 0.4 for the core. And right now they're expecting essentially the inverse, right? The normal being 0.4 and the core being 0.3. So my concern is you can't have lower PCE with the month over month being that high. You just can't, right?
Well, so depends, right? So we saw with CPI, the month over month is the comparing the shorter term versus the longer term. So you can have more volatility in the year over year number, but you also make the point a lot when we talk about this, that eventually you're going to start that reversal. And we're starting to see that with CPI. We're starting to see that massively with PPI. Do we see that now with PCE?
Not necessarily reversal, but more of just stagflation, which I actually just put a video yesterday talking about that. Actually, a reaction to Tim Pool talking about stagflation, because we talk about inflation staying the same, yet we never called it what it actually was. It's stagflation. And I personally think that that's where we're heading into. I personally think that that's where we're heading into right now. It's just inflation remaining roughly the same, if not ticking up slightly. Unemployment is at 3.9, and GDP in 2023, which I checked, it's only 2.5% for 2023, obviously. So, and as of recently, the Atlanta Fed revised their Q1 GDP lower than what it was before. So
what do you think GDP is going to come in at? Because we actually get that Thursday. They're predicting.
Oh, really?
Yes.
The previous day?
Yeah, we get 3.2 GDP versus 3.2 previously. So stagnation in GDP. That's what they're expecting.
Yeah, but that's looking at the quarter over quarter for Q4 of 2023.
Yes,
that's what they're expecting.
Yeah.
Right. I'm mostly referring to Q1 of 2024. Right. But looking at the GDP quarter over quarter for Q4 of 2023, yeah, it's once again stagnation. Right. Once again, we are getting stagnation. 1.7, and they're expecting 1.7, and for
that's prices.
Was that?
That's prices. So GDP is 3.2, and they're expecting.
Oh, I'm sorry. Yeah. So yeah, and they're expecting 3.2. So it's once again staying flat, and I mean 3.2 is well above.
It's above
Actually,
the
3
long-term norm, right? 2% is like 2 to 1.5 is like the standard run for GDP.
So what I meant to say is GDP right now is in line, or at least essentially coming in line with that of the headline inflation and below the core inflation as well, like the core CPI.
Yeah.
You get me? So this is why I'm saying that we're at equilibrium, where the inflation coming in equals the amount of inflation coming out. So we're stuck. You get me? We are stuck.
Yeah. Boil the frog slowly.
Not even boil a frog. It's just there's no movement, right? It's literal stagflation.
But
Inflation is increasing because, yes, the inflation rate has come down. But prices are still going up. Thing is that things are going up higher, or at least in line with what's coming in the form of GDP, in the form of wages. So that's what I'm saying. It's stagnant.
yes, but also like we talked about Jamie Dimon talking about how this is funded through government, right?
Yes.
So if inflation continues to increase, boiling the frog slowly, but the only number that you're seeing on GDP is a result of actual government spending, what happens when that government spending finally runs its toll, right? Because eventually that money works its way into the system because you're just printing and spending money like no tomorrow because you run a deficit, right? So a deficit is the essential. Having to borrow more means more money is pushed into the system, not necessarily through direct payments to people, but a deficit results in larger debt costs, which then affects the bond market and like a cascading effect. What damage is that going to do when that finally runs out? Because eventually, as we saw, not getting into politics, there's more chaos in the House right now with another bill passed with bipartisan, for lack of a better term, support, which we already have articles of removal being filed by one of the party members, and that can be invoked now at any time. So it's more of a, I would say, not a bluff, but like a threat, right?
Well, it's not even that, right? The bill that was just passed in the House is upwards along the lines of 1.2 trillion with a T.
Right? I remember someone saying that the billions are now going to become the trillions now.
Yep. Remember when I said that? When the first $1 trillion bill occurred in 2020, I said to you, from now on, every single bill that we're going to get will be with a T behind it. It'll be a number, a dot, and a number, and then a T. Yeah. Because that's just the way that it is. So government spending will not stop. And I'm very curious to read earnings season, guys, for Q1 is coming up again. I'm very curious to read what Jamie Dimon has to say again, right?
I think he's going to get like more and more blunt. That's my prediction. He's just basically, because he's going to be the only green bank, right? We went over and we were like, oh, this is going to be a bloodbath, like an absolute bloodbath on earnings. And Jamie Dimon's going to be the only green one, with Bank of America being like a 50-50 proposition. And I'm like, I wonder if he's going to just be like, well, Citi had a fun time. Let me be like Citi, right? Because he waddles back and forth between everything's hunky-dory to all of you are morons to you're hunky-dory to all of you are extra morons. And I'm like, I kind of like the blunt Jamie Dimon approach.
Yep, I agree with that as well. And again, we're going to see what happens. But lastly, where are we at when it comes to the fear and greed?
Well, I would like to add another broken index, right? Like your famous one of fear and greed being broken, as indicated by this. I would like to surmise my broken index now,
which is
damn reverse repo going flat for all eternity. This thing is just broken. I'm like, bond market, hello, banks are still underwater. Why are you flat?
Wow, that's actually kind of great.
We've been the same. We've really been the same since February. So we've gone 1-2 months now where this thing hasn't really trickled down, but it also hasn't gone up. So I'm like, is this the calm before the storm? Is this the new norm? Like, usually it was going down nicely. Now it's like broken. So I'm like, come on, do something.
Yeah. I mean, we'll see what happens with that. But looking at the fear and greed, man, it's also stuck too. So who knows what's going to happen? Again, we got PCE, which I wasn't even aware of. Not only that, but Q1 is ending, and pretty soon we're going to go into Q2, meaning that the earnings that we're going to see are going to be for Q1. I don't know. Stonks only go up. Apparently, stonks only go up. We'll see what happens. But anyways, guys, that pretty much does it for this video. Make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. Again, this week and permanently, we will live stream Tuesday and Thursday. I know last week we didn't do a live stream on Thursday. I was really exhausted. I'm so terribly sorry. But moving forward, it'll be Tuesday and Thursday. And yeah, any other thing that happens in between when it comes to like earnings, CPI, FOMC, we'll do an extra live stream when that day happens. But nonetheless, though, Tuesday and Thursday will be a guarantee. Or at least I'll try to make it a guarantee. And yeah, make sure to follow us on X as well. And with that said, peace out, and we will see you all next time.